Are we back to normal yet?
No, we still have to wear a mask unless you're in Texas.
I was talking about the stock market. But hey, for you and your family's sake, please wear a mask regardless of where you are.
Yep. Anyway, let's talk about the market. And we will also throw in some news about JD's earning and Disney's new big number.
And be sure to stay tuned all the way through for more stock picks.
For the S&P, we saw a nice rebound from the previous week. The index went on and tested the all-time high at 3,958. If the 3,900 level holds, expect the index to set new highs.
For the NASDAQ, we can see two different scenarios. First one is to keep going to 13,550 levels, and then to test the upper gap.
The second one is for the Nasdaq to turn around here and test the prior low around 12,400 level to form a W bottom before heading higher.
If it retests the 12,400 level, I'm definitely loading up on some stock with good fundamentals like PayPal and Zoom. What about you?
Absolutely a buyable level. I will stick to semi-tech stock like Nvidia and TSM.
Look at Russell Small Cap 2000. It's not small again this week.
It closed the week at high of 2351.
Sounds like buying the dips for Russell is not a bad idea.
Many Wall Street wolves are more in favor of small caps and cyclical stock now because they are expected to be more sensitive to the economy due to a strong economic recovery fueled by the vaccine in the second half of 2021.
For Dow, it made new high last week, and we expect it to continue the current momentum to keep climbing thanks to its top gainers like Boeing, Caterpillar, and Walgreens.
Some financial stock also contributed like JP Morgan and Goldman Sachs.
Speaking of Dow, Disney released some great numbers this week.
On March 10th, Disney Plus surpassed 100 million subscribers. Disney did it in only 16 months while it took Netflix 10 years.
Although Netflix currently has more than double the subscribers with over 200 million worldwide.
Disney is currently trading at 197. I've been waiting for the dips that never happened despite the recent market corrections.
Personally, I think Disney can surpass Netflix in the streaming media market because it has a great foundation in content creation, probably the best in the world, and it owns the rights to blockbuster titles like Marvel and popular sports channel like ESPN.
I'm a big Mickey fan, and I currently subscribe to Disney Plus and not Netflix. Not to mention Disney's theme parks are not even fully open yet. So Disney is also part of the economic recovery team.
Now moving on to JD. JD had a big earning this Thursday. The information services provider reported an EPS of 1.49 for the quarter, beating the estimate of 0.19 by 1.3.
And the fourth quarter revenue of 224 billions also beat the estimated of 219 billions with the year-over-year revenue up about 31.4%. Nice number as well.
But JD stock plummeted about 6.5% on Friday.
After taking a look at the earnings, JD recorded a GAAP EPS of negative 2.15. So I did a little digging and find out that JD increased its spending on logistics infrastructure. Instead of booking their profit, they are spending even more now to expand their services to capitalize on the booming e-commerce market.
Wouldn't that be a good thing though for the stock?
Yes, but they have not disclosed their guidance, so the investors are skeptical about the company direction and performance.
But I think as a leading listed retailer in China with a 31% compounded annual growth rate, that number speaks for itself on JD's future.
Also, by looking at their growth momentum, their overall year-over-year revenue grew 31%, and their year-over-year service revenue grew at a crazy 53%.
Which includes their logistics services that grew 95% year over year. So we can see why JD doubled down on expanding its logistics segment.
We really like the stock, But you guys should also know that since it is a Chinese company, there's always a geopolitical risk in investing in JD.
I already opened a position on DIB this Friday,
I'm hoping to see the price drop to low 80s.
and I plan on adding to my position sub 80 as well.
All right, top picks of the weeks. My first pick is DBX. It's recently broke up at $25 with volume. Any retest around 25 to 26 is a buyable dip.
My first one is PDD. It's another Chinese e-commerce company. Personally, I will look to open a position around 140.
Let's take a look at VALE, currently consolidating for another breakout. Keep your eyes on this one and set your alert on the breakout.
Next one is VIAC. Just look at the chart. We're not recommending, but you know what to do on Tuesday.
Gray loading zone for TMO. It is 450 right now. If the price dropped to 439 to 446, I would love to have more for my long-term holding.
My last one is BIGC. I plan on opening a small position on Monday if it goes below 58.
Thank you for watching. If you find this video helpful, feel free to give us a like and subscribe for more content like this.